Good afternoon, ladies and gentlemen. Good afternoon. My name is Randall Jenkins, and I wanted to come to you. I'm coming to you from my home office. I'm with Jenkins Financial. If you don't know what Jenkins Financial is, it is a tax and bookkeeping company. We do some financial planning. We do taxes for businesses as well as people. And we also do business consulting. And my phone number is 512-589-0744. Again, that's 512-589-0744. So if you have any questions, if you have your own business, if you have a network marketing business, and you have any questions, you can shoot me an email at jenkinsrandall@gmail.com. That's Jenkins, Jenkins, Randall@gmail.com. So what I'm going to do today, I'm talking to primarily business owners. If you are 1099, if you have your own business, if you are a sole proprietor, a LLC, a partnership, if you are a network marketing business person and you're in some kind of network marketing business, today I want to talk to you about estimated taxes as well as business expenses. So what I'm going to be doing at least once a week, I'm going to go through different expenses that you would have in your business. I'm going to kind of explain that. I'm not going to take a long time. And if you have any questions that you want greater detail, you can call me or shoot me an email. Now, a lot of times what happens is with with people that are in the hairstyling business or they have their own business and they are making money, a lot of times they will not pay estimated taxes. Now, you may ask, what is estimated taxes? Estimated taxes, that's the method that you use to pay tax on the income that is not subject to withholding. So you're basically taking the tax out yourself for your business because the company that you are doing business with, you are not an employee, so they will not do it. Now, some companies will shoot you a 1099 at the end of the year. Some companies will make you sign a agreement with them that shows that you are on your own as far as taking out the taxes for yourself. But a lot of times people don't do that. They wait till the end of the year, and then when the end of the year comes and then they figure out their estimated taxes, they don't have the money. So estimated taxes is a way every quarter that you can estimate what your tax will be. The advantage to paying estimated taxes is that it's not an exact science, but by paying your estimated taxes during the quarter, you don't have to wait till the end of the year to pay a lump sum amount because most people won't have that lump sum amount to pay it. And so the way it works is January, February, March, your estimated taxes is due April 15th. April, May, June, your estimated taxes is due July 15th. July, August, September. October is when your third quarter is due. And the fourth quarter, which is October, November, December, January of the next year is when your estimated taxes is due for the fourth quarter. So there's an advantage to paying estimated taxes. And what we do is at Jenkins Financial, we basically fill the forms out for you and we will instruct you on what your estimated taxes is. And so it's a huge advantage to paying estimated taxes every quarter versus waiting until the end of the year. So we're now going to go to different expenses that you would have in your business. I'm going to go and I'm going to talk briefly about an expense that most people don't normally have any paperwork to pay, but they use this expense all the time. And this is the mileage expense. When you're in your car and you're going from your business to other locations, you get to write off the mileage. The IRS gives you a certain mileage, a certain cents per mile that you can use. Now you have actual mileage, which is your gas, your oil, and your upkeep of your mileage. But you also have standard mileage. Standard mileage doesn't include the gas expenses. Standard mileage includes just a total mileage that you have during the day. For instance, if I'm working at a location and I go see a client and then I drive back to my office, I get to write off that total mileage. That total mileage could be 20 miles. And so if the mileage is if the mileage is 20 miles times 55 cents a mile, I add that up, and that's what my mileage is for that day. And so I get to write that standard mileage. Normally, your standard mileage is greater than your actual mileage, which is your gas or oil. So say if I paid $10 on Monday for for gas for my car, and then I actually went to see a client that same day, and that was 20 to 25 miles, that amount, which is the standard mileage, is going to be greater than the $10 that I paid. And so I would automatically take the standard mileage. Okay, so when you're doing your mileage, you can go to Office Depot or Office Max or Staple, and you can actually buy a mileage book, and it costs like $1.50, $2, and you can use that mileage book and put in the mileage that you have taken for that day. That's how you can keep track of your mileage. Okay, now, as I said, you have standard mileage, then you have actual mileage. Actual mileage, again, is gas, oil, repairs, and maintenance. You keep track of those, and every quarter or every month, you want to keep track of your standard mileage and your actual mileage. If you have any questions of how to do that, my company, Jenkins Financial, we can help you do that, and we can definitely help you with your mileage, and we can also help you with your estimated taxes. Once again, my phone number is 512-589-0744. You can hit me up on Facebook, or you can give me a call, and I can answer questions that you may have. Once again, I'm Randall Jenkins with Jenkins Financial. Have a great day.